Chapter 3, Problem 2, the concluding two parts. I call them 1 and 2. The book calls them B and C. Let's do what they ask. I don't care what you call them. Let's do part B. Prepare an income statement and a statement of cash flows for 2018. We can do that. We're going to need the information from here to do our income statement. So, let's take a look. For the income statement, we're going to need the revenue, which is this guy, and we're going to need the expenses, which are those two guys. So that's what we need. So revenue, sales, and they use the term net sales, which simply means stuff we sold and the customer didn't bring back. So our net sales was $31,000. How do we know the customer didn't bring it back? They didn't tell us they did. Our cost of goods sold was the cost of the goods that we purchased. That's this number right here, $15,000. You know now by definition, sales minus cost of goods sold is gross margin, $16,000. Operating expenses come out of gross margin, and the only operating expense we had was the $500 that we paid for shipping. FOB destination means it's ours until they sign for it. So we get to pay that $500. Yay! So we'll subtract that $500. You wouldn't normally use minuses on an income statement, but I'll put them on just for the sake of clarity. So our net income is $15,500. They also ask us to prepare a statement of cash flows. And again, although just the term statement of cash flows brings terror into most people's hearts, it really isn't that tough. Let's do one, and this we'll do it in red ink just because that was the pen I grabbed. Well, we have cash inflows from customers. Remember, that's an operating expense. It's doing what we do. So cash in from customers, right here, $31,000. So that's the cash in from customers. So we need that number, $31,000. Cash outflow for inventory. They give us that number. They tell us that the inventory that went out was $8,800. Okay, cash outflow for inventory. We have to account for the inventory cost us $15,000. The cash outflow, and I'm trying to figure out why they came up with a cash outflow number that doesn't make sense to me. They're saying the cash outflow was $8,800. That doesn't make sense to me. Let's see if we can figure this out together. So they bought 26, they bought 31, and they sold stuff that cost 15. Oh, I'm sorry, tease. I'm a moron. It's cash. We paid $8,000 in cash. and we paid $800 in shipping. I'm a moron. I'm hoping some of you looked at that and said, "Yo, dummy, aren't you listening to you either?" We're doing a statement of cash flows. We paid $8,000, so the amount we purchased doesn't matter. Statement of cash flows, just what we paid. We paid the $8,000, and we paid $800. So the cash out for inventory is the $8,000 and the $800. And the cash outflow for expenses, that was the $500 that we sent out. So our total cash flows from operating activities is 31 minus 8 minus 5, and that comes to 21,700. Now, cash flows from investing activities, again, there were none, so don't make any up, and there were no financing activities, so again, don't make any up. Our net change in cash, the total change in cash this period was 21,700. And what was our cash at the beginning? 16,000. Cash at the beginning, 16,000. Our ending cash, 37,700. Want you to see something. 37,700. Look at how we started. When we added up all the cash in and out, 37,700. That brings us to the next thing. Why is there a difference between net income and cash? Well, net income looks at everything you did, whether you got paid for it or not. Remember how I screwed up when I was thinking about the inventory? Statement of cash flows just says, if you did business only in cash, no accounts receivable, no accounts payable, no sales on credit, no purchases on credit, this is how much cash you would have. So statement of cash flows and an income statement almost always will have different numbers. Occasionally they'll be the same, but that's got to be a very odd, rare, and small business for that to happen.